I'm Shilpa Raut, looking after the derivative desk from Prabhudas Leeladhar, and today's session is all about a key derivative indicator that we have amongst us, which is very widely used, and it is a very important indicator to help us understand how is the market behaving live and how will it behave in a couple of sessions ahead, so that you get well prepared for your trading day. So let's start. So just a second. Okay. So I hope I'm audible now, and everybody can hear me out. If yes, just please send me some text or something so that I know that you can hear me now. Okay, fine. Audible now. So before I start with this session, let me brief you about this derivative data indicator that we are going to talk today. As the name suggests, it is open interest, OI, that we usually hear a lot in all our daily trading lives. Whoever does in FNO, future and option segments, or also in cash segment, we always hear this term as OI. And why it is important is because, uh, okay, let's go back to a past month now. To all our sub-brokers, dealers, and clients here, we have come out to remind you that every morning before the market opens, this one thing I really want to highlight here is every morning before the market opens, from the PL derivatives desk, we come out with a short note which gives you a rough idea about your trading day going ahead, and also making you prepared for a couple of sessions going ahead as well. The reason to highlight here is because the past month, let's say on 3rd of March, I came out with a short note highlighting a very important data. Nifty was trading at around 11,800, 900 zones that time. And the option chain, the option data, which we usually always talk about, is the option data saying, what is the OI saying. So that this indicator that we are going to discuss today is something that was highlighting that we might see 10,000 and below levels very soon. It was 3rd of March this year. We were trading at 11,800, 900 zones. But the data for the following next 4 to 5 days was very strong on this fact that we are going to see 10,000 zones for sure. But Nifty was continuously holding 11,800, 12,000 zones. Little did I also know that, the point that I was keeping on highlighting every morning, and, throughout the data, throughout the trading session also, with small short notes that I come out with all the groups that you guys are, active, and, all the emailers that you receive, which comes as an PL derivatives view. So there, this is what I have been highlighting all the while, that, from 12,000 zones, we are likely to touch 10,000 zones very soon. What happened is that little also did I know that, we will touch that level so soon. Maybe in a 10 days time, we touch 10,000. And while we were falling from 12,000 to 10,000, we all, you, me, or any other, active participant in this stock industry, broking industry, we're just talking about, bottoming out. We are 10% slide is done, so we'll bottom out here, then 15% slide, then we'll bottom here, 25%, 30%. But it was only this derivative data, this OI indicator particularly, that was always highlighting the fact that no, we are good to go beyond those 10,000 levels as well. And in the following couple of weeks, we touched 7,500 zones. Then also we were just keeping on hearing that the bottom is made, but it was only beyond the 7,500 zones that derivatives data, this OI indicator particularly, made us believe that yes, maybe for a temporary zone we have found a rough bottom now here, and from here maybe we can see a reversal of maybe around 12-15% or 20% so in some following sessions. And it happened also that way. From the low of 7516, we reversed and we again touched 9,000 zones. And again, the same data, if you have noticed and if you are reading all the morning notes that we sent you in the form of like PL derivatives view for the market, that also I keep on highlighting. We've been mentioning that Nifty is going to consolidate between this 8,000 zones to 8,800 to 9,000 zones for a while now. And it's been like more than 10 trading sessions. We have been consolidating on that zone as well. So the reason to highlight this is, please do make sure that you go through our morning notes daily so that you are well prepared for your trading sessions and you are well prepared and you know what to do going ahead in market. And the reason again why I'm saying this, because this the indicator OI, this open interest, is what we are going to discuss today. And this is one of a very, very important indicator that we have in derivative segment that helps anyone who can understand this and read this right, can understand in live market as well what is going to happen for that underlying that we are dealing, maybe index, stocks, whatever, and what is how is it going to behave for the rest of the session or maybe going ahead for a couple of sessions. So quickly starting with that, let's see, I'll just start. So what is OI? Open interest. Open interest, as the name suggests, it's a plain simple English language. It is open interest. It is what means that the number of contracts that is live out there in the market. Open interest. Let me make it very clear. It is the number of contracts that are currently outstanding in the market. If you can see, for for every buyer and seller for a contract, OI is counted as 1, whereas volume in this case would be counted as 2. So this is one only key difference between what is OI and what is volume. For OI, you need to have one buyer and one seller, then only it will be counted as 1. But volume in this case would be 2. So in that case, what happens? OI can increase, decrease, be flat. But unlike volume will keep on increasing. Let's say number of sellers increases, the volume will increases. But OI would, subsequently decrease or be flat. So when OI is such a indicator, but alone, stalking that and understanding without the price action is not that beneficial. So in that context, what happens? OI, when it is clubbed with price and volume, we are very sure, or maybe you can say you get a very crisp view of what is going to happen for that particular underlying you are dealing with. Let's say if OI is high and your price is also high upside and your volume is also up, we assume that this momentum is very positive and this uptrend will likely to continue. So it is a bullish sign that we assume. Likewise, if OI is high and the price is down, we consider this to be a very bearish sentiment and we expect your underlying to go to downtrend, which means that it is a bearish segment now. So these two stages are very clear and very easy for any layman in the market also to understand and to know whether your stock movement is bullish or bearish. Apart from this, in derivatives, we have two more stages while dealing with OI, which is short covering and long unwinding. I'm very sure that many of you must be hearing this term as well: short covering rally, short covering rally. What is it? So when OI is negative or maybe downhill, but the price is rising, it means that it is into the short covering stage. So what does that means is that open contracts that are getting covered and maybe the current trend of that underlying is going to be sideways for some time to upside. So it is a semi bullish segment that you can infer long before the particular stock turns bullish particularly. When OI, likewise, when OI is down along with price and volume, it is the long unwinding stage. In this stage, what happens? We term it as climax, which means that the underlying is very weak and there are long positions are getting shredded, and it means that the momentum is going to die and we are going to see some negativity towards this underlying. So the main thing is that in derivatives OI, uh, understanding and figuring out this short covering and long unwinding stages are very important, because when you are sure of the bullish and the bearish segment, there is a very marginal movement to happen. If you see the price is high, OI is high, that means the market, the underlying or your stock or your indices is already running up. So going ahead from that, how long will you make it happen? It is something you lose out on your profit margin. But with short covering and long unwinding stage, if one can infer these stages quickly, you actually broaden your horizon to make your profitization to the maximum. So these two stages are very, very important. Please remember, when OI is negative, price is up. That means it is into short covering stage. When OI is down and price is also down, it means it is into long unwinding stage, which means short covering is deemed to be semi bullish, long unwinding is deemed to be very bearish. So, like I said, the difference between open interest and volume, because this is one thing people often confuse themselves with OI have, like I've said, one buyer, one seller, then you compromise yourself with one OI, but volume it is two. OI denotes the number of active contracts, like we all know, it is the open contracts that are flowing free in the market, and where the traders' interests are in actually particular, whether long, whether short, whether sideways, whether you should enter that stock or in that momentum or not. But volume refers to the quantity of contracts traded, like I've said. So this is the thing that I've been talking about, the price action with OI. So, and what is the outlook? Like I said, OI is positive and price is also positive. Then action it is long built up, it is bullish. If OI is falling negative, and then it is action is short built up, which is bearish. If OI is shedding, that is negative, and price is up, it is short covering, which means it may move sideways to little positive movement. And if OI is negative, price is also negative, action is long unwinding, which means it is the climax. So these are all the theory things. So I will also take you live to the option chain in NSE site, where I'll make you understand why is OI important, how to understand that. So, but before we do that, it is important that we quickly run through some important terminologies that we come across daily while dealing with options. So like in the money, ITM is one strike that is below your current ATM. So, and out of the money, like we all know, it is the price that is the strike that is further than your ATM. And at the money, as we all know, it is completely nearer to the current spot price of the strike, the current price of your underlying. So let's say OI, when derivatives data, this OI indicator particularly matches and with your technicals data also, or maybe just the vice versa. The view that we come out is with very crisp, because if OI is supportive, let's say stock, let's say like Cipla. Here we have taken into Cipla. Yesterday's Cipla data was very positive. I mean, on Friday's last trading session, Cipla was very positive. It showed a OI rise of more than 5%. And if we see the technicals data, basics also, if you see like MACD, moving averages or RSI, it came out that Cipla is crossing over this MACD and RSI also being bullish now. So when I club all this data, basic technicals with my OI data, I was very sure of Cipla movement to be bullish for the day. And it happened so today as well. Of course, we saw good rally in number of stocks today across the board. But yes, Cipla, just taking out one pick and telling you that Cipla was supposed to be bullish for the session. So how do we know this? So this is the NSE web page. Okay, so when you go to NSE, make sure you go here and filter equity derivatives. When you do equity derivatives, and you need to type your stock. Let's say I took Cipla here. So when you enter, you will see this particular page. So in this page, what happens? Cipla, it is for the last trading session, that is Friday, the trading session page. So where do you see this change in open interest? How will you know if OI is rising, positive, negative? So it is very clearly here, if you can see. This percentage change in open interest is 5.35, which means that the OI is positive. Price we can see here is already positive, and volume is here, which we can see is quite high. So which means that if you just go to this simple page as well for your particular preference of stock or indices, wherever you are trading at, and if you see, if you can see this data, if it is positive, and if you can judge basic technicals as well, whether it is bullish in technical charts as well, then you can understand that this stock is going to perform well. So if you go to now, how do you understand option chain in live markets? So if you can see this page, see there is this tab option chain. You need to click here. Once you do that, this sort of page will open for you. In this stage, what has happened? If the Cipla, if you see Cipla, see, we need to understand this are the call side and this are the put side. The area which is yellow here is ITM, that is in the money for call side, and this area which is in yellow here on the put side is the in the money for put. It is always in the reverse side, and the white shades are known as the OTM for call side here and for put side here. So in this case, what happened? Wherever we see maximum, see if you can see here, this is OI everywhere built up here for put. This is OI built up for calls. So one basic thumb rule to understand OI in live market is to see where is the maximum participation happening. In put side, if we see the maximum OI built up is at 400 levels. And in the call side, if we see the maximum OI built up is at 500 levels. So we are well good to know. Okay, one thing I would like to tell you, whenever put side you see the maximum open interest happening, it means that for that particular underlying, the brief support levels would be the same. In this case, if 400 on the put side holds the maximum OI, we should assume that 400 for time being is the support zone for Cipla here. Likewise, to understand how long will it go on the upside, where is the resistance going to come, we need to see the maximum open interest that is there on the call side. So if here we see that at 500 zone, we see the maximum call open interest happening. So our range is between 400 to 500. So if anybody wants to go long in Cipla now, would be advisable to do that. You need to have a stop loss for near 400 zone, and at max you need to understand that you 500 around zones you will face a resistance. So this is one way to understand open interest in live market, to know if anything you are holding, and if you are already involved in any sort of trade and it is not going likewise you anticipated, you can always go to this NSE site, open this option chain, and you can understand that why and how is the market movement for this particular underlying is happening. So this is one thing. So this is the Cipla technical chart that I was talking you when I was looking at derivatives data. I could see RSI crossing over, going up, so which means it is bullish on that front as well. So it matched with my derivatives context. So I was bullish for Cipla on this. Now, if you see this is again one important page. This is Nifty option change. Like you went to Cipla option chain page, the same way you need to go to Nifty option page. I'll show you. The same page, you need to filter equity derivatives here. I need to type in Nifty to go for that particular page. And once you're there, you need to go to this option chain, and here you will see this sort of page coming up. The reason I'm sharing this page for you is because since a lot of FNO traders, they like to trade in indices particularly, and any sort of option strategy that we do in our daily trading sessions or monthly expiring particularly, there are many traders that do that. They always focus on Nifty. So today the main concept to show you this is to make you understand that what is why to understand this page. So let's say uh, if you see this Nifty chart, Nifty option page, chain page, see, we need to understand this is the put side and this is the call side. Like I have told you already, we need to understand the support for put where it is lying. So if you see, the maximum OI on the put side is at 8,000 and the maximum OI on the call side is 9,000. And if you have observed our daily notes that we sent as PL derivatives daily notes, we have been constantly saying that any breach below 8,000 we will touch 7,500 zones, and any upside is only possible if we cross decisively 9,000 zones. So this is the reason I have been writing that note every day. The reason being that we have uh, the support at 8,000, and if we breach that we will see 7,500 because the next maximum OI stands at 7,500. Also we have a support at 7,800 if you can see. And if you see at all this, the most active strike has been this 7,800 strike. So which means that 7,800 after 8,000 we are good, we having a good support at 7,800 zone. Only then we will move down to 7,500 or below levels. Likewise, option chain suggests that 9,000 has the maximum OI built up there, which means that this is the very stiff resistance for the time being. So any upside will happen only when we cross 9,000. So the reason this page, how will it help us? For option traders particularly who believe in doing some strategy. So there are a couple of strategies that any layman can start doing it with simple understanding of OI or from this page. There's one, if you see, if we suppose you are bullish on Nifty, so how will you know? How will I know that Nifty can move from here to there? Like I said, this is the total OI on the put side, and these are the fresh contracts that are getting added on the put OI side, which means that 8,000 then 7,800 is building up very actively positions, which means they're adding up to the support zones. Likewise, if you see 8,400 is very active here, and it means that this will pose first immediate resistance, then 9,000 will come. So, and we are trading at 8,000 zones. So what happens is that if we breach below 8,000, we will hold at 7,800. And if we continue holding 8,000 levels, this means that we might touch 8,400, which happened today. If you see, this is all Friday sessions data, and if you can see, it is so concrete. We didn't break 8,000 levels, and today we flew up to 8,500 in zones and above. We touched 8,700 nearly, and we will likely face resistance at around 9,000, like we have already understood from this option chain. So what happened, we have a margin of upside of around 400. Let's say we are sitting on Friday trading, Friday after market, and we know that for an upside from here Nifty, we have 400 points gap, because from 8,400 is being the most active strike. If here it will come a resistance, and on the put side we see that 7,800 is the most active strike, which means the downside will hold at 7,800 for sure. So in this case, what happens? We are more bullish. We have 400 points upside and 200 points downside, since Nifty is trading at 8,000 zones nearly. So in this case, anybody would like to go long, keeping a stop loss of 7,800. If you are going completely naked on future contracts, then keeping a stop loss of first 8,000, then 7,800, you can go long for targets of 8,400 to 99,000. This is for futures. If somebody has to do in options, so what will that person do? In that regards, we can deploy one option strategy, which is bull spread if you're bullish, and likewise if you are bearish, you can go for bear spread strategy. In bull spreads, what happens here, like I've said, there are many. What can an option trader do? You can buy any call options which or put options which are known as naked options. Suppose you are bullish, you know that Nifty will touch 8,400. So what can you do is you can just go and pick any 8,100, 150, 200, 400. If you have a target of 8,400, within 8,100 to 8,400, any strike you can go and buy premium, buy just simply buy option chains. So these are the option prices for call side, and these are the option prices for put side. So when you're buying a put option, which this means that you are bearish on your view. If you're buying a call option, which means that you are bullish on your view. So likewise, if you sell a call option, then it is bearish in view, and if you sell a put option, it is bullish in view. So what happens, since VIX is very high nowadays, and we are having premiums very high. So many people, what they do is, when they're bullish, instead of buying call option and investing, they are selling put options and eking out the premium in the time decay process. So this is also one way we trade in options. So when coming to option strategies, what one can simply deploy is naked options, like I said, buy call option, put options, or sell call options or put options according to your view, your understanding. Or you can go for bull spread. Suppose you're bullish, like in this scenario, we know 8,000 to 8,400 is a range. So we know Nifty will face resistance at 8,400 first. So in that regard, what we can do is we can deploy one bull spread strategy. What we'll do is we'll buy 8,000 or 8,100 strike at, let's say, 8,100 at 180. And since the premium is very high, to adjust and to make our investment less, we can, what we can do is we can sell one 8,400 call option. So we'll get a premium of 70 rupees. So our 180 goes down by 70, and we end up investing only 110 instead of 180. So this is known as a bull spread strategy. In this, what happens? You have a range between 8,100 to 8,400. You know that this is the maximum Nifty will go on the next trading session, and you want to play safe and you don't want to invest more. So what you do is you deploy the strategy, and you buy one lower strike call option and sell one higher strike call options. In this, what happens? It only adjusts to your premium, and you end up investing less. So this is comparatively less. Likewise, beer spread, if you do, what you do is you buy one higher strike put and sell one lower strike put. Again, the same thought process, that you need to lower down your investment and risk should be less. One very famous, very commonly widely used strategies in indices, if anybody is monitoring option, is known as short strangles. Short strangle is what it is: one selling of call option and one selling of put option simultaneously, which means OTM. It is OTM selling. You need to sell one OTM call option and one OTM put option. In this, what happens? You form a range. And the strategy is well first when you know the range of the market that is going to play. In this case, when I say that, on the downside, if I see 7,500 is going to hold, but after 8,000, then on the higher side, we see 9,000 has the maximum open interest there. And then if you see that, followed by 8,500. So in this range, what happens? That you form a range. In this range, what happens? You can do any strategy, and most widely used is short strangle. In this case, what happens? You know that the range on the downside is 7,500 and on the upside is 9,000. So in what you can do is you can sell one call option and one put option, and you can benefit from that time decay, and without investment, you actually take credit from the market, and you sit and you can just wait for the expiry to happen, and so that this premium gets zero, and then you can end up making good profits. So likewise, straddles also option strategy where you play with ATM strikes, like let's say 8,000, then 8,000 strike put and call both. If you sell or buy, it comprises of straddle strategy. So likewise, what the main focus for this session was to understand OI and the importance of this indicator to help you know how the market behaves as and when required. So in this context, what happens if uh, like PL, we are well versed with our research, and we have a good team from technicals, from fundamentals, from derivatives, and we come out time and again with our views, our stock ideas, thematic reports that continuously we strive and we try to put forward for our clients, for our brokers, for our dealers, to make their life easy in our daily trading sessions. So please do listen to us, and if any query you have, you can just post me right now. Also, I am there. I can answer you live now. And so that's it. So happy trading. So let's start with our question and answers. If anybody is there, Any queries I can there, I can answer. Please do ask. Okay. As per weekly option data, not showing more upside from here, Mr. Jamin Shade. So weekly option data, like I've told you time and again, that we are in a range bound market from 7,500 to 9,000 zones. So in that context, we are still there. So either we breach 8,000 and we move downside, or we break 9,000 and we move upside. Then only any sort of decisive movement we can judge. As of now, it is a range bound market. Any more questions? Okay. Ma'am, your calls are good. Difference between straddles and strangles. Okay, thank you from Balaji. Thank you. See the difference, like I said, strangle is like a range, buying one call side, so selling one OTM call and selling one put options, and straddle is playing with the ATM at the money strike. So this is one key difference between straddles and strangles. Okay, Mr. Rajesh, your question is very incomplete. It's only written that please option trade should please complete a statement so that I can understand. Okay, Mr. Meet is asking where to find the morning notes. It comes in form of mail, wherein morning view is given by Mr. Vikram daily, and it's mentioned PL derivatives view. Apart from that, we also send PL morning insights, and daily basis we keep on writing, updating in all our WhatsApp groups, and in Telegram mainly. You can always follow us in Telegram, PL India Online. You can join that group, and there you will find all the regular updates that we share from PL derivatives. Okay, Mr. Rajesh, good insights on OI. Thank you so much, sir. Okay, Mr. Mitesh is asking weekly option OI, monthly OI, same strike price, how to find? Okay, so that is one key thing. I'll do one thing. So I'll tell you. So Mr. Mitesh, can you just get in touch with us, and I can explain you the same thing in detail. And any other. So I guess thanks. That's it. Everybody is well answered. And any other query, please to get in touch with us we have shared time and again our contact details, where to see and where to not. Mr. Rajesh is asking, is the session on YouTube? Yes, sir. It will be very soon uploaded. I'm sure it's live also now. If not, then also you can see this later. Not an issue. Yeah, some consulting concerns is asking, can we get recording of today's seminar? Definitely, sir, we can. Mr. Abhishek Kumar is asking, please suggest some book on options. Okay, Mr. Balakrishna is asking, today Nifty closed 8,700. Could Nifty change range bound? Like I said, Mr. Nifty is in range bound between 7,500 to 9,000 zones. Either downside we break 8,000 and we 7,500, and or upside we break 9,000 and we move up. So till then, it is the range. For timing, immediate trading range lies between 8,000 to 8,800 zones. How VIX has an effect on market movement, Mr. Ankit Mehta? So VIX has a very, very important effect on market movement, particularly in this scenario. So, but then that is a complete different study and different. Maybe I'll get one webinar session done on VIX movement as well to make everybody understand how it implies to us. Any other queries? Any other query? Anyone? Okay, I guess everybody is well answered and completely okay. So any other queries, please do post us or write to us, and we'll be happily answering to all of you. And so that's it. Thank you. And I hope the session is quite well informed to everybody. Any other query, kindly help us.